Fios is not cable. We're wired differently, which means you can get the fastest internet available with equal upload and download speeds from 50 to 500 megs. So you can upload 200 photos before your favorite song is finished. Click the ad and switch to Fios today to get our best offer ever.
This is a download from BFM 89.9, the business station.
So good morning, Dodge. Nasdaq closed at 5,210. One of its biggest weekly rise and reached new highs because of Google's result. What do you make of this, Dodge? Can this continue?
Good morning, Julian. Well, yes, Nasdaq is definitely outperforming the other two indices. I would like to see more of spreading of the good news across the board as opposed to being just focused on, first of all, Nasdaq, and then secondly, very specific stocks. Obviously, we're very happy about Google, but we do see more upside potential for Nasdaq. It first refused to break when the other two levels, the S&P and the Dow, did break their danger levels. The rally got legs when all of our popular averages went through their upside resistance levels, but now the market continues really to reward and punish market participants based on their very specific stock picking. We really need to have other major markets participate, and that's going to be a real challenge for the breadth to broaden. The Nasdaq has a whole group of sectors representing potentials, but you talk about internet, that's obviously performing very well right now. We like Interactive Group, Shutterfly, Web.com, ZIX Internet Services, Stamps.com. So there are a great deal of names that are definitely buys. But also, even in the NASDAQ, in technology, we were somewhat concerned with semiconductors. We are out of or looking to short Flextronics, Applied Materials, Linear Technology, OmniVision, Lam Research. So you can see it's not just the average; it's components within, and you have to pick your stocks very carefully. And we're going to watch to see whether the S&P and the Dow can participate. Otherwise, the rally that we're seeing and the strength we're going to see is going to be focused very specifically on NASDAQ and very specifically on stock issues.
Now, one of the other things that could have driven the markets to greater heights is the fact that a lot of share buybacks have been happening. About over $2 trillion actually have been spent on buybacks, and that's almost the same as the expansion in the Fed's balance sheet. Does this reflect the lack of innovation and investing opportunities by listed corporations?
Lack of innovation and investment opportunities relative to the potential the companies have by borrowing under very low interest rates and doing financial engineering to make the stock price and earnings per share in particular look better. Right now, that's the fact. And quite frankly, that's just a continuation of the lack of transition that we have faced from market valuations based on low interest rates to valuation based on real economic growth. It hasn't happened yet. And that's one of the reasons I believe that supports Yellen and her desire to start the interest rates rise this year, and what we're looking for is September. Once that happens, then I think the transition will occur from companies looking at low interest rates as a potential to increase their earnings per share through financial engineering, and they'll start to use those funds and their internal growth for more economically viable longer-term opportunities. But right now, if low interest rates tell you the best way to improve your stock price is to go through stock buybacks, that's what companies are going to do.
And what about M&As? We've also seen a fair share of very gigantic M&A deals. Is this also driving up markets?
Oh, yes, and they're going to keep soaring through year-end as CEOs seek to buy growth and reduce costs. But the deal fever will cool off somewhat in next year.1Obviously, behind it is cheap credit that makes it possible through ultra-low interest rates, abundant cash for deal-making. Worldwide, there's up to $1 trillion sitting idle in private equity firms, eager to put that money to work. High stock prices also give public companies plenty of buying power, too. So what will curb the M&A frenzy next year? Well, obviously the end of rock-bottom interest rates, more regulatory scrutiny of pending deals. We're already beginning to see that. Industries where deal-making has soared this year, we've seen it in healthcare, energy, and telecom. But as you get into next year, we suspect that there's going to be a transition away through M&A and towards internal growth. That will be part of the transition away from low interest rates.
Now, Dodge, moving on to the other thing that I want to talk about, which is gold. The price has actually fallen to a low of 1,131 per ounce. Is it time to look at this metal again?
Well, Julian, from a pure investment, from an individual's investment point of view, no. Both the short and long-term trends are clearly bearish. And to make matters worse, the support at 1144 that we've looked at in the past has been violated big time, and bullion has dropped, as you were talking, on Friday to a new multi-year low at 1126.30, and a close below that level, the Friday low, would signal that it's getting ready to test gold's major support in the 1,000 to 1,050 zone. That's basis July. There is upside resistance at the 1144 to 1155. So at this point, Julian, from an investor's point of view, there is very little reason, unless you're very long-term oriented and have a feel for the potential demand that may grow in the future. But for now, there's still time to wait, and for gold, it has to find some kind of support before it starts to go up again.
Now, in conjunction with this, we also saw reports that China reported gold holdings that was 60% above what they reported in last time, which was back in 2009. But this number is still at 1,600 tons, very much below what the entire global analysts were expecting. As the yuan begins to be a global currency, do you think the Chinese accumulate more gold and provide some kind of a price support?
Yes, I do. We're talking global, we're talking macro, we're talking about a country being the buyer. Lifting the yuan's potential as a global reserve currency is what is behind China's move to lift the shroud of mystery surrounding its hoard of gold. It has ambitions to create a global reserve currency, and given its size and economic strength, that makes all the sense, and it will happen. It will challenge the hegemony of the U.S. dollar, and also fill a void that's being created by the declining holdings that we're seeing with central banks and the euro. So you are talking about a definite buyer at some point in the future. The IMF is considering the inclusion of yuan under special drawing rights this October, but clearly there's a lot more legwork to do if the Chinese want to be taken seriously, and it's really more a question of time. So, yes. Longer term, here is a real source of demand for gold, and it will be, and for good reasons, as we transition to including the yuan in the world currencies of strength. But in terms of an investment point of view, the timing is very unclear. It is very much in the future, and the way gold is behaving now, it is really not a buying opportunity yet.
But what you just mentioned about China seems pretty positive for gold, as well as we're seeing markets reaching stratospheric heights. Valuations are a concern right now. When you say long-term, what kind of time frame are you talking about?
I suspect that the uncertainty about China becoming part of the world currency group will be within a year, within 12 calendar months. But between now and then, there will be a great deal of volatility and publication of what the Chinese are doing with regard to buying gold. And so I suspect that there's really not enough short-term potential, Julian, to be a buyer of gold at this point. But within the next 12 months, it's really a matter of time before the yuan joins the other world-renowned currencies in terms of global perspective. And it's just, but from an investor's point of view, in terms of investing in gold, which the Chinese need to support the world valuation of the yuan, that's going to take longer time, and it is uncertain, and you're not going to get a clear picture as to what the Chinese are doing in terms of buying gold until after the fact. So it's more of a long-term potential and support for gold in terms of a currency support, as opposed to timing and investment opportunity.
Thank you. That was Dorland, Chief Investment Officer for Landor and Fuest Capital Managers in New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.
This year, I will chew 117 number 2 pencils.
I will doodle 9 Staples notebooks to death.
When it comes to school supplies, it's guaranteed your kids will go through a lot.
I'll make a whole lot of paper airplanes.
I will lose my backpack.
That's why you get guaranteed savings for back to school at Staples.
I'll give away my last pen to Nathan in math class.
Get guaranteed savings at Staples, and right now, one subject notebooks for just a penny with a $5 purchase. Staples, that was easy. Valid on select SKUs while supplies last. Limit 6.